the first key presenter in day 2 of this conference meeting. We want to invite Dominic Kiarie, the CEO Jubilee Asset Management, to do the next presentation on emerging risks and future trends. But ladies and gentlemen, we want to understand who and what Dominic Kiarie is. Allow that I share with you his profile. With so much honor, sir, allow that I read it out loudly. Dominic Kiarie is an accomplished business leader and an entrepreneur, chief executive officer with over 25 years of experience in the financial services industry, gained regionally and overseas. He has an extensive industry experience and proven strategic and technical skills in asset management, investment management, and investment banking. With a background in actuarial science and investment banking, Dominic has led 3 successful financial services companies to market leadership positions. He currently serves as the CEO of Jubilee Asset Management Limited, overseeing in excess of shillings 195 billion in assets under management. Since joining JAML in December 2022, he has revitalized the business, positioning it as one of Kenya's fastest growing asset management companies. Dominic's career spans senior executive roles with diverse companies including UAB Holdings Limited, renamed to Old Mutual Holdings Limited, as the Group Managing Director and CEO, and at Britain Asset Managers Limited as the Founder, CEO, and Managing Director. He has also worked for other financial services organizations based in the United Kingdom and South Africa, including SL Investment Management, a UK-regulated alternative investment fund manager, and with the First Africa Capital Limited, a Pan-African investment bank that was later acquired by Standard Chartered Bank. Ladies and gentlemen, he was previously the founder chairman of the Association of Collective Investment Schemes in Kenya, ACIS, and was also team leader of an industry forum on the development of REITs regulations in the country. He holds a Master of Philosophy, MPhil, degree in finance from the University of Cambridge, United Kingdom, and a first-class honors Bachelor of Science degree in actuarial science from City University of London. He also holds a certificate in finance and investment and a diploma in actuarial techniques from the Institute of Actuaries, London, UK. Outside of work, his interest includes reading, traveling, fitness, want to look at him, fitness, tennis, swimming, golf, and spending quality time with his family. Wow, that is the rich profile of this gentleman. Give it up for him as he comes now to his presentation. Welcome so much, sir.
Thank you very much. Thank you very much, moderator, for that introduction. I was asked to provide my summarized CV. I did not know that it's going to be read at this forum. But there it goes. So that's my background. I'm very privileged and honored to be with you this morning. So I'd like to start by doing the honors So before I begin, just the officials of KETSA, the leadership of all the SACCOs who are present this morning, program moderator, ladies and gentlemen, all protocols observed. Good morning. Good morning. I'm very, very honored and privileged to be with you this morning, the 14th annual conference of KETSA, and the theme of the conference being risk management for a vibrant cooperative movement. So, as has been introduced, I run Jubilee Asset Management as the Chief Executive Officer. Jubilee Asset Management is a fund management business. It's a wholly owned subsidiary of the Jubilee Group, which I'm sure you're all aware. Jubilee Holdings is listed on the Nairobi Securities Exchange. It's one of the strongest and most profitable insurance group. And what we do is, as a regulated fund manager by the Capital Markets Authority and the Retirement Benefits Authority, we provide fund management services to both retail investors, members of your SACCOs, including yourself, and also institutions such as the pooled funds that the SACCOs hold, and also some of your pension schemes. Now, I was asked to give a presentation on emerging risk and future trends. So I'll just provide some key highlights of what we see as emerging risks and future trends in the context of managing portfolios. Those could be portfolios of pooled funds, it could be the pension schemes that some of your members belong to. Because as you're aware, we live in a VUCA world, which is a volatile, VUCA standing for volatile, uncertain, complex, and ambiguous. There's a lot of uncertainty in this world that we live in. So in the context of the portfolios that you invest in, the cash that you hold, the pension scheme that your members belong to, so what are some of these risks and how can fund managers such as Jubilee Asset Management help you to navigate this risk? So SACCOs, like the SACCOs that you represent, have expanded their role in the provision of pooled savings and retirement security for their members. And increasingly, they're managing large pension schemes. As we've seen, some of the pension schemes have grown over the last 10, 20 years, including pooled investment funds. We've seen SACCOs investing very, very actively in diversifying the investment from the traditional, putting money in bank deposit. Now they're actively investing in money market funds, including other investment funds. However, the emerging risks and there are certain future challenges which threaten the sustainability and effectiveness of this fund. So how can the SACCOs build resilient, compliant, and professionally managed and governed pension schemes and pool funds? So in terms of the key emerging risks, there are several risks that you as SACCOs, the funds that you manage, are exposed to. So I'll just cover a few. The ones that we feel are important in the context of the work that we do as professional fund managers. The first one is market volatility and instability of returns. I think we've all seen what has happened over the last 5 years. There has been a lot of volatility in the financial markets. We had COVID in 2020, which completely disrupted the financial system. As we know, there was a complete lockdown and economies went into a tailspin where there was a lot of hardship. Interest rates inflation went up, and central banks globally had to address that risk of inflation by increasing interest rates. We've also seen that governments, especially in the emerging markets, are facing challenges of debt sustainability, i.e. governments are borrowing very, very heavily both from the domestic markets and international markets. To give an example of Kenya, our debt to GDP ratio is close to 70%. So in other words, 70% of our GDP is debt, both external and internal debt. And therefore we spend a huge amount of revenue collection, taxes that the government collect to pay for this debt. Now, all this instability has resulted in risk. We've seen very volatile interest rates. About 5 years ago, rates were sort of single digits. When inflation went up, interest rates were increased. Of course, the returns were very high, offered by government securities. But when during last year, rates started coming down, we saw when rates peaked up to 18%. But because now inflation has gone down, the government has been reducing the central bank rates. And we've seen since October of last year to now, the central bank rate in Kenya has reduced by over 325 basis points. And right now, treasury bills are yielding about 7 and 8%. So rates are now down. We have seen Kenya shillings depreciating against other foreign currency. As an example, over the last 10 years, the Kenya shilling has depreciated by 41% compounded against the US dollar. And of course, as interest rates come down, the real returns on investments are reducing. So because of market volatility and instability in returns, that is creating challenges for the portfolios that you own. And therefore, there is a need for strategy to mitigate against those risks. So what are some of these strategies for mitigating those risks? One of them is diversifying your portfolios, because diversification lowers risk. You can diversify your portfolios into alternative investments, including offshore investments, carefully selected offshore investments. Your portfolio managers or professionals who are managing your funds can continue to employ tactical asset allocation and hedging overlays and other strategies. And of course, also rebalancing your portfolios regularly and ensuring there is review of investments. So the second emerging risk that we've seen it to continue to be the markets we operate is inflation. And of course, currency depreciation. Now, inflation, as we know, is the average increase of prices. And over the last 10 years, Kenya's inflation rate has averaged about 7%. Now, if you compound that over 10 years, over the last 10 years, at a compounded rate of 7%, that means that the value of 100 shillings 10 years ago has been eroded every year by 7%. And therefore, what 100 shillings you buy 10 years ago is very, very different from 100 shillings that can purchase now. And I'm sure we've all experienced the impact of inflation. You go to a supermarket with 1,000 shillings today, the goods that you can put in that basket is very, very different to the number of goods that you were able to put about 10 years ago. So inflation, from the perspective of investment, is a bad thing, because it erodes the value of your return. And therefore, there has to be a strategy on protecting your assets against inflation, and also protecting future pensions against inflation, so that pensioners' income is not eroded by inflation. So that's one. Secondly, I think on currency, as I mentioned earlier, Kenya being a net importer, we expect the Kenya shilling to continue depreciating against the hard currencies such as the dollar over the long term. And of course, depreciation of the shilling also introduces inflation. So then the big question is, so how then do we ensure that the portfolios that we manage, the investment funds, the investments that you as SACCOs hold, how do we ensure that these are protected against inflation? So again, there are a couple of strategies. Some of them include allocating a portion of your funds to inflation-linked instruments, and of course, foreign-denominated assets, especially in hard currency. Exploring offshore investment options under the RBA approval limits in case of your pension scheme. There's a 10% cap, as you know. And of course, reassessing the added 500 billion over 2024, and that's on account of the increase in contribution to NSSF. However, the exposure, it is still the same. have exposure to government securities 57%, guaranteed funds at 19, so a total of almost close to 70, and alternative investment is very low. So we believe there is very, very good opportunity to consider enhancing the exposure of pension schemes to alternative investment assets. So, Jubilee Asset Management, I think it's well known to the market. I'll spend the next 2 to 3 minutes just to provide us perspective of Jubilee. We are a regional financial services group focusing on insurance and investment management. We have an asset base of in excess of 240 billion, very, very strong balance sheet. The entire group was profitable, profit was in excess of 6 billion. And there's a target in the next few years to have profits PBT in excess of 10 billion. We service over 1.3 million customers, and we have over 900 employees in the 4 markets which we operate, which is Kenya, Uganda, Tanzania, and Burundi. In terms of the asset management business, we provide services to both retail clients and institutional clients. So we have unit trust funds, the money market, the fixed income fund. We have structured products. Very, very strong. We have a very strong innovation pipeline. Offshore investment, including wealth management products. On the institutional side, we provide discretionary portfolio management to pension scheme, trust endowments and funds, and insurance funds. And we are working on a new product which we'll be launching shortly. It's a platform to provide pension schemes and other investment funds exposure to alternative investments. So in terms of how we've grown as a business, we've also we've achieved very, very strong growth. You can see on the retail side, in December 2022, we're just managing 20 million with 11 clients. Right now, we're managing in excess of 15 billion with over 15,000 retail clients, just on a space of 26 months. And then the institutional business, we've grown from 91 billion to 177. But this is mainly the Jubilee Fund. So I think once we launch our new products, and based on the new strategy that we're executing, we expect to move from the current about 195 billion we're managing to a very large figure. We have a strong experience in alternative investment at Jubilee. The first one is Jubilee Energy Limited. The Jubilee Group owns over 25% of Jubilee. Jubilee is the largest hydro power project in East Africa. It is based in Uganda, supplying 50% of the electricity need for Uganda. What is interesting is the average return annualized in dollars on that investment is 24.3%. If you add Kenya depreciation against the dollar of 3%, so this was yielding on average about 27% IRR in Kenya shilling terms. The next investment that we own as part of our target investment is Sacco. Sacco is a large infrastructure provider. It owns the cable, internet cable from Cape Town all the way to the Asia continent and the rest of Europe. So we have, as Jubilee Group, owning 33.3%. So as you send, the text that was being sent, as you look at your SMS, you're actually using an infrastructure that is owned by the Jubilee Group. So, and this is what we call essential services. Next on alternative investment is we own a stake in the IPS Power Investment of 18. The return has been very, very strong, in excess of 28%. And then we also have exposure to very selected what we call alternative real estate. So there is a commercial building called Vienna Court, which is designed as a campus style, and Jubilee stake is 37.1% through a company called PDM. And finally, we also have exposure to other alternative through Jubilee Holdings, Farmers Choice, Sacco Power, IPS Kenya, of course the DTB Bank, the Serena Hotel, and Nation. So that's the end of my presentation. So once again, thank you very much. appreciate you for this wonderful conference that you've held. Thank you for giving the opportunity to share with me some of our thoughts. Of course, this is an ongoing discussion. We'll be very, very happy to continue engaging further with you on this very important topic of managing risk. Thank you very much.